The 1 week anniversary of the biggest liquidation ever in crypto was yesterday, Friday. Every crypto and Twitter crypto influencer is screaming manipulation.
Exchanges, but I personally think they might confuse the traders on the exchange with the exchange as such. The timing of it was also too
either the most gross negligence the world has ever seen, or some of the most insane market manipulation we have ever witnessed in our entire lives in the crypto industry.
We just saw billions of dollars disappear within minutes. But what if this wasn't chaos, but instead a coordinated strike that exploited a single design flaw inside of China's largest crypto exchange and the largest crypto exchange in the world by trading volume, Binance?
Billions wiped out in minutes, Bitcoin nuked, alts obliterated, retail wiped clean. And whilst everyone was panicking, whilst 1.6 million traders were getting liquidated, one mystery trader made over $190 million short in the market. This wasn't a random event, it was an operation.
The crash began minutes after the US markets closed, at the most illiquid time of the week. Oracle networks started misfiring, reporting bad price data. Market makers went dark. Exchanges froze retail accounts. Even analytics sites like CoinGlass and CoinMarketCap went offline. It all felt coordinated, like someone had pulled the plug on half of the market at once. According to the Kobolesi letter, crypto began selling off more than an hour before Trump's announcement. It's crazy, right? Whales were already shorting. Big positions were building. And it suggested this wasn't just the panic. Someone knew what was coming. That's the part that separates this crash from every other, because what happened next, the insider positioning, the exchange breakdowns, and the liquidations didn't start with fear. They started with precision.
Hello everyone out there, this is Alexander F. Onilere of Caliban Crypto. They're telling the tale of how long before the US president made his announcement of 100% tariff on Chinese, a mysterious whale who recently opened a new account on Binance went in on a 23 million short, which they then closed 10 minutes after the announcement and got away with almost 200 million cash. A lot of crypto influencers are pointing to insider trading. Kyle Chaser also took a dim view of what happened, and he explains that the market started rolling over hours before the announcement.
All right, let's dig into that, because the deeper you go, the less random this all looks. The craziest part of this entire event is that the market started crashing before the trigger was even pulled. At 9:30 a.m. Eastern, Bitcoin began to roll over a full hour before Trump's tariff post. Whales were already shorting the market in size. They weren't reacting, they were positioning ahead of time. By 4:30 p.m., just before the US stock market closed, one whale dropped another 23 million in short orders, setting off the first big liquidation wave. Then at 4:49 p.m., they doubled down with another position. 30 minutes later, Bitcoin hit its daily lows. But here's where it gets impossible to ignore. According to Marty Party's analysis, an anonymous trader or group of traders opened a massive short position on Hyperliquid, one of crypto's fastest growing decentralized derivatives exchanges. Those accounts were brand new, created that same morning. And when the dust settled, those trades had netted over $192 million in profit, closed perfectly within minutes of the bottom. So either someone made the most well-timed trade in crypto history, or more likely, they knew what was coming before anyone else.
That was Kyle Chaser's take. Now let's take a look at what CTO Larson has to say about it.
Collateral begin depegging or collapsing. This also destroys collateral value. At the same time, altcoins across the market begin crashing. Liquidation engine kicks into overdrive for selling other assets like Bitcoin, Ethereum, altcoins as collateral values evaporate. Cross-exchange hedges unwind and the contagion spreads globally. Total liquidations 19 billion. I'm not sure of the timeline. Binance says that the order of events was slightly different. They say the extreme market downturn occurred before the depegging, and that the depegging 10 minutes later was a result of prices falling, and the exact details doesn't matter.
The cascade goes something like this. Trump swore to destroy China with 100% tariff after the rare earth metal announcement. Stock markets begin to sell off. Then Bitcoin and Ethereum sell off. Cross-margin leverage unwinds and kicks into play. Altcoin assets, USDE, used for collateral, gets sucked out, causing altcoin bleeding to accelerate. Crypto veterans and crypto newbies lose millions. Even people with 3x or 1.5x leverage got crushed. I personally lost about £6,000, and people who've been in crypto for years start jumping out of windows and are alive in themselves. Crypto Lab says the new alpha is insider trading across the board, and every market is pulling this trick, and she gives examples like this.
On October 2nd, options trackers flagged a massive unusual bet. Someone dropped nearly $6 million on out-of-the-money call options. A crazy high-risk gamble. The kind of bet you only make if you're certain something big is coming. Less than 48 hours later, OpenAI discloses a 10% strategic stake in the company. AMD stock skyrocketed 23% in a single day. Those call options, they exploded over 300%, turning that $6 million bet into $18 million. Same playbook, different market. A perfectly timed, insane bet right before game-changing news. No accountability, no investigation. Prediction markets. Just this month, the Nobel Peace Prize was awarded to Venezuelan opposition leader Maria Corina Machado. She wasn't a favourite. Her odds were near zero. But about 11 hours before the official announcement, the odds on her winning on Polymarket surged from under 2% to over 70%. Somebody knew. They placed their bets, and when the news broke, they cashed out. It's the same story everywhere you look. Crypto, stocks, global events. Some people have the information before the rest of the world, and they're monetizing it in plain sight over and over again. The game isn't random, it's asymmetric.
Some people are screaming for an investigation into Binance, and a lot of them are not buying Binance's explanation. Some say it was just a cascade of cross-margin calls. Everyone agrees is that it was a coordinated manipulation because people couldn't access their accounts. Coins depegging where you could buy for $200 but you could only sell for $76. And some are saying Binance's $263 million compensation or refund is not enough to cover billions. And some, like this gentleman here, are asking for everyone to boycott Binance.
This is not okay. So Binance released a statement on this, which I am not at all happy with. What they simply said is, due to heavy market activity, our systems are under high load. Some users may experience intermittent delays or display issues. We're actively monitoring the situation and working to resolve it. Funds are safe. People are losing billions of dollars at this moment, and this is the corporate mumbo jumbo that Binance is spewing on their account. If people are unable to buy a crypto asset when it's losing like 80% of its value over the course of, 45 minutes, there's obviously something wrong with that market. Because there are people that are actively able to trade that, but these people are probably insiders. But ironically, there were also short traders that were deleveraged and were pushed out of their positions. Now, what this essentially means is there were people on exchanges that were short just out of chance before Trump made this announcement. And what happened is these exchanges, because they were unable to pay out these shorts, actually delevered these short positions and did not allow these people to cash out these shorts. This happened in many different instances, and this is why this is blatant corruption, and this is why these market makers need to be held accountable, because they're allowing certain insiders to make hundreds of millions of dollars, but then they're taking away the opportunity from retail investors to actually make any money during this. If you were even able to access your exchange and you were even able to open up a short during this crash, you would have gotten nothing because they would have delevered most of you guys at a 7-to-1 ratio.
I've taken all my money out of Binance in support, even though Binance was one of the first platforms I ever invested in 2017. What people aren't buying is that while every other coin was going down 90%, 80%, 70%, BNB went up 10%, and a few of the meme coins went up while everything across the board was bleeding. What I don't like is that most of the president's fortune is mixed up now in crypto, and his announcements seem to coincide with Trump meme coin, this capitulation, and people are now saying that whoever owns that wallet in Binance is closely linked to President Trump's family.
That this wallet was insider trading. In fact, Grok puts it at 85% likelihood of being insider trading, and essentially saying that this reeks of uneven playing fields. Now, ultimately, there's not much that we can do about this insider trading, because how are we ever going to prove that Trump was able to give whoever this was, the heads up before this actually all went down? All we can say is we can look at the numbers and watch where this money goes after the fact and kind of play it off of that. But I do think that this insider trader, whoever this person is, needs to be held accountable. I do think that Binance needs to be held accountable for not allowing people to trade or deleveraging their shorts. Either one is egregious.
Well, I for one hope all the people involved in this die an awful death where their guts are spilled out for animals to eat. Or I could take the route like Raoul Pal, who's saying the 4-year cycle is dead, and now we're going to a 5 to 6 year cycle. This is the optimist in me.
The data tells a new story. We're in a phase shaped by global liquidity, debt, and politics. Forces powerful enough to stretch every rhythm the market used to follow. Two of the sharpest macro minds, Arthur Hayes and Raoul Pal, have been tracking this change.
Liquidity, our total liquidity composite, explains around 96% of the variability in tech stocks and around 90% of the variability in Bitcoin.
I think the way I try and put this is it is the single most dominant macro variable we've ever had. When they increase the Treasury General account back up to the $800 billion level, what they're actually doing is taking liquidity from the system because it's now stuck in their account and not going around the system. This rate of change matters because it was $500 billion. 2023, we saw a large rise in the Treasury General account. And guess what? Crypto markets were sideways to soggy as they are today when this happens. But we're very near the peak. It's a very crucial thing what happened because it was a big withdrawal of liquidity that happened fast. And crypto is the furthest out on the risk curve. So it's the marginal effect hits crypto more than anything else.
That's the reason Bitcoin went sideways while on-chain metrics looked strong. The Treasury pulled $500 billion out of circulation to rebuild its account on the Fed. Once that pause ends and cash flows back out, liquidity returns to markets, and crypto is the first beneficiary.
So what they're saying is we could be in for a longer Bitcoin cycle, which is going to take us to the end of 2026, that when the new Fed chairman comes in next year in May, there's going to be money, liquidity spread all over the place. And if you believe that, you'll believe anything. And right now, as I'm doing this video, the altcoins are going straight down the toilet. So until next time, this is Alexander F. Onileri saying, is this the end of crypto as we know it?